Hello and welcome back to Green Pips FX. And on this video, guys, we're going back to the Fibonacci tool. Now, this is a very powerful Fibonacci strategy and Fibonacci tool that will allow you to catch sniper entries in different places in the market and make you absolutely profitable in this market. Now, first and foremost, we need to have, of course, a structural impulse for us to apply the Fibonacci. That structural impulse being a break of structure with a low and a high being formed in a case of a bullish trend, and then all we're gonna wait for is that pullback towards a certain point in that Fibonacci tool for us to be able to catch that impulse move and head to take out the highs, right? So first and foremost, we'll need to have, of course, a low, right? A low that creates a high, and this high is a high that does what? Is a high that breaks structure. That breaks structure. So this is in a case of a bullish trend. So in a bearish trend, it's just gonna be the absolute vice versa, right? We're gonna have a high and a low that breaks structure. Now, of course, I'm not gonna illustrate it, but it's totally understandable, right? And from there, all we need to see is that pullback towards that area of the fib, which is drawn from the low, to the high. And then we're gonna have our entry levels being put into place. Now, for sniper entries, right, we're gonna use the 0.7 level and the 0.786 level, and their stop losses will both be at this 0.8 level here, right? So we're gonna have an entry 1, an entry 2, and the stop losses. And of course, there is this 0.618 level. This is for normal entries, and I would rather not recommend it, although sometimes they're both valid points, but I like the 0.7 and the 0.786 because they're most accurate, and as well as their risk is very minimal. But at some instance you can have something like this. You can have price, right? So this being the fib tool doesn't mean that price is always gonna come and test this area and then leave, or test this area here too and then leave. No, there are some instances where you will miss entries, right? Price would just come to the 0.5 level and then leave, right? Or just come into the 0.618 level and then leave, right? That's scenario number 1. Scenario number 2 is that they will come to the entry points, right? So let's just remove this. They'll come to the entry points, give you very cool sniper entries, and then go in accordance to your trend and your anticipation. And sometimes you can get something like this, right? Price will just come, test your entry 1, test your entry 2, right? Hit your stop, and then come even to break this low here, right? That happens. That's why the fib tool is not 100% accurate, and there's no forex strategy that's 100% accurate, and that's simply because sometimes the market conditions cannot be anticipated 100% correctly. So yeah, based on what we do, this is just anticipation, and from the back testing and forward testing of this tool, it has proven to be over 95% accurate. So that's the left 5% is for the entries that you will miss and for the entries that will hit your stop. But more often than not, it would come give you perfect sniper entries and then go as planned. So from that being the illustration, let's now go to the charts and see how the fib tool works. So let's just remove that and see the gold chart. So I'm going to give you 2 scenarios and show you exactly what happens. So first and foremost, right, we can see that the gold chart here is pretty much in a bearish trend, right? We have a series of highs and lows being formed, right? We have that high that formed this low here, that formed that high, that formed this low high, and then from there we can just anticipate what this internal low high, and then low, right? So now we're expecting a potential low high before the continuation bearish if price still wants to go bearish. But that's not the case. So let's go back in here and see how this scenario played out. So I'm going to illustrate in this area here when we had this break of structure here, right? So we have a structural impulse bearish with a break of structure that originated from high to form a lower low. And from that, we can now place our fib tool from the high to the low, right? And you need to take these at exact points, right? Boom, from that high to this low. Look at what price does, right? So price comes in, price comes into the fib tool. Of course, it tastes your 0.7 level. Does it mitigate a 0.786 level? Let's zoom in and see if it does, right? Let's just remove this. Nope. So you can see, guys, this entry here, it was never triggered. So let's just put this very accurate in there. Boom. And this one here too, right? This one in here too. Let's just put that very accurate, and there we go. So we have our entry one line, we have our entry one line, our entry two line, and our stop loss line. So we had a short position opened here, and it stopped there, right? And another short position opened in here with its stop there. So as you can see, only entry number one got triggered and entry number two never got triggered, and that's okay, right? That's why I say this tool is not 100% accurate. So in the end of it, you still got one entry, right? Now, as you can see, the 0.61 level does work, but the amount of risk from this line here to this line here is massive. That's why I normally don't advise to use it, right? The amount of risk is just way too high, and you know, we don't want to risk that much, right? So so there we go. Our take profit targets, number one is here, number two is here, number three is here, number four is there. So let's see how this entry works, right? So we have to ourselves, if we take all four take profit positions, we have ourselves a 1 to 9 RR trade, right? And take profit target 1 has been hit, take profit target 2 has been hit, so it's only 3 and 4 still left, right? And you can see that's it's a good one, it's a good one. So until now we're running about 6.5 RR, right? And you know, that's a good one, that's a good one, especially for a fib tool. So there we go. We can now just remove this because you know, that's example number one, and then it's an absolute beauty the way these sniper entries have been obtained. Now let's remove these and see example number two. So example number two, I was looking at this in a structure when we had this this low with this high here, and then well, we obviously didn't have break of structure. We only had an internal break of structure, but you know, from there we could also just plot another fib tool here. Sorry, let's just do this. I don't know, is that my internet? Yeah, I think it's my internet. Okay, so we're back. So we could just plot a fib tool from there to this low here, from that high to that low there. Now look at what happens. So price comes up. Guess what? So this is entry line number one and entry line number two, right? The 0.7 and the 0.786, and both their stops lie at the 0.8 level. So boom, we have entry number one there and entry number two here, right? So you can see now what I was talking about in terms of risk, right? The risks of these trades are very much minimal, right? And of course we're looking to target our take profit targets, right? So there it is for entry number one and entry number two, right? We just look to target these lows here. So particularly on this trade, right, as you can see, there is pretty much take profit target number one is hit right there, right? Take profit target number two is hit right there. Take profit target number three is hit right there. So it's only remaining this take profit targets number four. Now with these RR being, this trade is a 1 to 19 RR and this is a 1 to 9 RR, right? So up until this point here, right, and this trade, it's already a 1 to 14, or it's just basically it's 1 to 15 RR already, right? So it's running a 1 to 15 RR, and the second trade is, oops, you just return it there, and the second trade is running about 7 RR. So that's like a 22 RR in total still running, right? And this is absolutely beautiful from the Fibonacci tool. Now I hope this video was very informative to you, and if it was, of course, don't forget to like, subscribe if you haven't, turn that bell button on for notifications, and until the next time, guys, stay safe, have a nice trading week, and peace out.